Hello, everybody, and welcome to the third episode of UCL FinTech's FinTech in the New Normal webinar series. This is the third Monday that we're doing this, and we've got two more to go after, so stay tuned till the end to find out what our next streams are going to be about. But for today, let's just get started. Let's jump right into it. Today's first speaker is someone that you may recognize if you tuned in last week. She gave us a very fantastic and efficient 15-minute introduction to blockchain, which is a no mean feat, let's put it that way. So we're going to welcome her. I'm just going to introduce her a little bit, and she's going to come and say hi to you all. So she's been named, among other things. I think if I introduce all of her accolades, we might be here for the whole hour and a half. But among other things, she's been named Forbes' leading evangelist for blockchain. She is the CIO for Molinari Media, if I'm correct, as well as holding other positions, including an industry expert at UCL's very own Center for Blockchain. So close to home for some of us who might be UCL students. And I'm just going to welcome her, and hopefully she can say hi and introduce herself as well a little bit. Hi, Jane. How are you?
Hello, everyone. Really great to be here with you. Thank you.
Great. Thank you so much for being here. So I think, Jane, correct me if I'm wrong, but you're going to be giving a presentation where you talk a little bit about some of the applications of blockchain that can have some positive impacts outside of just some of what we might envision in our heads, right?
Yeah, that's right. I want to broaden it from financial inclusion because I think financial inclusion and identity is related to so many other areas that blockchain can also have a transformational impact.
Mm-hmm. Great. Okay, so I'm just going to get out of your way here and put up your PowerPoint, and then you can get started.
Thanks, Serena, and hi again, everyone. What I wanted to talk more broadly about is around how blockchain relates to the Sustainable Development Goals and the different ways in which it can contribute to many of these. So I'm going to highlight a few, and financial inclusion is one. But if you go to the next slide, I just want to focus on first the key kind of efficiencies or elements or characteristics of blockchain that make it so valuable as a tool to be able to empower the bottom billion and link them with the global economy. Because if you start with the premise of people being unbanked, that means they're not participating in the global economy. So it's fast, it's secure, it's efficient, it's transparent, and it's cheap. And these features will continue to resonate throughout the rest of the presentation. So if we go to the next slide, what I've tried to demonstrate there is just a number of the different ways in which blockchain provides a critical use case that can be useful in terms of the Sustainable Development Goals and supporting the poor and vulnerable. So the one that you're probably most familiar with, of course, is digital currencies and fast payments, but there are many more. Supply chain, health records, provenance, transportation, voting, energy, taxation, tokenizing welfare payments, government engagement with citizens, land titles, and industry creation. And as we go through, many of these have actually come to prominence during the COVID pandemic. So supply chain, for example, has been one that's received a lot of attention, both because of the breakdown in supply chains and also because of the proliferation of fake personal protection equipment that took place during the pandemic. So we'll come back to a number of these. So let me move on to the next slide and just put some big numbers in front of you, which really demonstrate clearly that this is not about a technology looking for a problem. This is about very real problems that exist today that we may be able to solve using technology. So if you start with identity, identity is the key to almost everything. And we have 1.1 billion people in the world today who have no identity. So without identity, you can't get a bank account. In some countries, you can't go to school. In some countries, you can't access healthcare. You certainly can't be able to register your property. So this is a critical factor in almost everything that we want to do if we want to include people in the global economy. Next slide, please. So the next point is around just how many people in the world are unbanked. And it's estimated there's 2 billion people in the world who are unbanked. And the majority of those are women. And so this is an issue that needs to be addressed. The third key point that I want to highlight is around, next slide please, is access to energy and electricity. So we have about 2 billion people in the world who have no access to energy. And these are issues that blockchain can certainly help solve. Next slide, please. If you think about financial services and financial inclusion, one of the things that you need to think about is that many people in the world survive on remittances that have been sent by their relatives who are overseas migrant workers. So this is a real example from a country called Papua New Guinea, which is north of Australia and has a very high rate. 85% of the population are unbanked. And it's one of the most expensive remittance corridors in the world. So I just want to illustrate a story so you can understand how important digital remittances can be for people. So if we start with this lady here, her relative is working in Australia and wants to send her $200. Now, depending on whether it's a bank or a post office or a money transfer operator, they're going to take anything from $20 to $40 out of the 200. So have that in your mind. In any event, it's been sent and there's only 160 to be received. Now, this woman lives in a remote village. There is no bank in her village. So even though she's been sent the remittance, she can't receive it in her village. So what she needs to do is take some form of public transport to the nearest town with a bank. And in this particular use case, that cost her $60 and took approximately 6 hours. So she has to spend a day traveling down to the place with the banking facility to receive the $160, which becomes 100 because she just spent 60 going to get it. She needs to spend the next day getting the money, and then she needs to spend a third day traveling back to her village, which costs her another $60. So in the end, out of the $200, she barely has any money left because of the cost taken by the remittance provider and also the transportation cost. Serena, I think there's one more button you can press if you wouldn't mind. Yeah, thank you. To bring up, sorry, so the amount of loss that she experiences on that $200 remittance is significant, both because of the time and transportation as well as the actual charge by the remittance provider. And if you then think about what could be possible for the lives of people like her, a digital transfer to a mobile phone could result in no loss of time and virtually no loss in the transfer fees. And that's hugely powerful if you actually think about the volume of the remittance market in developing countries. So let's just go on to the next slide and I'll take you through some examples of where blockchain can actually address some of these global challenges that we have. So Serena, please press forward. Yeah, just press forward 4 times because otherwise I've just got to keep telling you to do it. Thank you. I've mentioned the issue of identity and I've emphasized that that's a prerequisite for financial services, but it's also a prerequisite for many other kinds of government services. Financial inclusion, if the unbanked don't have access to any financial services, and with digital rollout of money systems, you could provide that kind of access to people, including people like the woman that I spoke of, who live in remote villages where there are no banks or post offices. With land assets and registration, many poor people actually have land. It might be communal land or it might be privately owned land, and they're able to convert that to value if they're able to actually register their land, link it to an identity and prove ownership, because then they're able to borrow against it and they're able to invest in businesses and so forth. Another area which I'll talk about a little bit more, which people probably don't think about that much, is, again, if you think of the remittance scenario and you think of philanthropy and money from donors like DFID, a proportion of that is also spent with the middleman who's transmitting the money down to the recipients that they want to reach. So if you think about something like the Global Fund for TB, Malaria and HIV, they actually pay local fund agents in every country, and it's often the major financial accounting firms like PwC and EY, just to make sure that the money isn't misused and it gets down to the recipients. So if you actually worked on being able to transmit these large billions of dollars of donor funds to recipients using smart contracts and connecting to the identity of the recipients, you could cut out anything from 10 to 20% of donor funds, the total amount. And if you go and have a look at what DFID spends, it's well into the billions. So these are significant amounts of money and significant reforms that can be made possible through blockchain. Let's go to the next slide. So I just want to touch on some sectors here, because again, all of these, while they're not directly about financial inclusion, they're about citizens' rights and citizens' access to services. So they're tremendously important. And many poor people get their livelihoods through agriculture. And often farmers don't receive a fair deal on their products, and middlemen both take cuts all along the supply chain and solely increase the price, and there's a lack of transparency in provenance. And provenance actually is one of the areas that's moving quite fast in terms of supply chain, both because of some scares like mad cow disease, for example, but also that people are increasingly interested in where their food comes from. So some of the big outlets like Tesco's and Walmart, for example, are paying people to be able to track the provenance of their goods from the farm to the shop, so you know that the coffee that you're buying actually was grown in the Ethiopian highlands, for example. And that also enables the farmer to get a fairer deal. Another one which I think is of considerable interest and prominence at the moment is around democracy and lack of trust in government. So there are a number of projects around the world where people are working on blockchain-based voting systems, and I'll talk a little bit about it shortly with another couple of slides, because blockchain enables the increase of trust and transparency in the electoral process, but it also makes it far more convenient for voters because you don't have to leave your home and go to another place to vote. Climate change and green energy, I'll also speak about more, because there's a couple of areas that are really important in terms of where blockchain can contribute. One is in the actual movement of climate finance, as I spoke about remittances and as I spoke about donor funds. The other one is in the tracking of carbon credits. And then finally, in the production and consumption of green energy at a village level, and I'll talk more about that. And I'll also cover health. And of course, being in the pandemic, we've seen a real acceleration of innovation in terms of healthcare, both with blockchain solutions as well as other technological solutions to help people combat the pandemic. So just going on to the next slide briefly, and then go to the next slide. So this is just the heading slide for climate finance and green energy. And this is an example of a small solar power in India. Now, solar power, the prices come down and down, so people are able to purchase a solar power grid of this size, or even a much smaller one for household use. And what's possible with blockchain and cryptocurrencies is that someone who owns a small solar panel is able to sell micro amounts of power. So, for example, you live in a rural village which has no power, and you can go to the person with the solar panel and you can buy a small amount of energy to charge your mobile phone or to charge a solar light and make a micro payment using cryptocurrencies. So this creates both a small business opportunity for people in villages, as well as actually enabling people to access small amounts of energy. Next slide, please. So if we think about humanitarian disasters and refugee settings, interestingly, but not surprisingly, this is actually an area where tremendous innovation is going on, both with blockchain and with other technologies. And it's somewhat akin to the pandemic, because when you're in an emergency situation, then you're not so concerned about legacy systems and regulation and all of the reasons not to innovate. You need to innovate because you're saving lives or averting disasters. So if we go to the next slide, I'll take you through a few examples of where humanitarian and technology or technology is being used in humanitarian settings to be able to improve the way that people are responding to disasters. So we start with drones, blockchain, and data analytics, tracking populations on the move, because people aren't already in camps. Often they're fleeing a war-torn situation and moving from place to place and seeking shelter where they can find it. And this is a setting where often it's not safe for others to go. And so using drones with blockchain and data analytics, they can track these populations on the move. The second one, which I emphasize frequently, is around identity, because this allows people access to entitlements and different transactions. But it also, if you think about, say, professionals who fled Syria, they almost certainly fled without their university transcripts or their certificates of different courses and skills that they have. And so that means that when they get to a destination, it's very difficult, if not impossible, to be able to relink back to their credentials to prove that they have professional certifications and that they actually have skills to work, as well as linking back to their bank accounts, as well as linking back to property. So again, identity allows them to link back with their history, but it also enables them within the camps, if they get to a camp, to be able to receive benefits. So one of the most well-known examples of this is the World Food Programme Building Blocks program, where they're using blockchain and digital tools to be able to give credits to people to buy things from the stores in the camps. But it also allows people in camps, in refugee settings, to do peer-to-peer value exchange. It enables people employment opportunities, creating a digital workforce for people who have those sorts of skills. And I was very interested recently to be reading about a project called Electroneum, which might be of interest to some of you to look at, because they're creating, not for humanitarian settings, but exactly this, so people can undertake work through, if you like, the gig economy and be paid in cryptocurrencies. It can harness new tools to open pathways for securing livelihood and economic opportunity. And also in terms of the funds administration and remittances, it's an important way to be able to reduce the cost of the funds administration and transfer of remittances and get them directly to the correct beneficiaries. And then finally, I just want to alert you to the challenge of human trafficking, which is a whole presentation on its own. But if people don't have identities, women, children without identities can very easily be trafficked and very easily be given fake identities and moved through bypassing the authorities. So identity is a key to preventing human trafficking, and human trafficking is something that happens commonly in refugee, humanitarian and crisis situations. So let's move on to the next slide. I think I'm probably going too long, so I'm going to hurry up. The tracking and tracing of donor funds, I've spoken about it at some length, looking at how it allows to validate transactions. Smart contracts can ensure that the funds reach the recipients. It has transparency, so you can track and trace, for example, with the provenance of pharmaceuticals, because fake drugs is a big challenge. Speed, I've mentioned already. Reduced procurement time. So this is a real example from the US government where they reduced the procurement time from 100 days to 10 days by using blockchain and AI to assess the proposals from bidders for a big procurement contract. So estimates vary, but it could be as much as 150 billion is lost in funding through the leakage of donor funds and also through the inefficiency of the way that we do it. So moving on to the next slide. This is just, yes, Rene, yeah, thank you. This is just a schematic showing the different, back to agriculture. This is a schematic of, yeah, thank you, of the different points at which blockchain can intervene in an agriculture supply chain and can add value. So crop insurance, crop loans, very important for farmers, asset tracking, supply chain, provenance, fast payments, and land registration, certification, and subsidy vouchers. So all of these things are being applied in agriculture around the world using blockchains. So just moving on very quickly, and Serena, you can move through the next slide and go on to the next one. This is blockchain thinking about state-citizen relations, because one of the things that blockchain can do is severely reduce the cost of voting and government engaging with citizens. So these are real numbers from Australia, and you can tell it's Australia because of the attire of the people in the picture, but it actually costs us $2,261 to vote in a state election by the time all the overheads are applied. If you use a blockchain solution, it's estimated that this could be reduced to 50 cents per vote. And that's a huge difference. And what it also enables, if you go on to the next slide, is you've got convenient voting via smartphone or computer cheaply. So what it means is that government can engage far more regularly and often with citizens. There is, in fact, a blockchain-based voting group here in Australia called the Flux Party. So we have our own blockchain party, and their proposition is you vote for us and we'll let you vote on everything. So look up the Flux Party, it's rather fun. But on a serious note, this really does offer some potential for government to increase engagement with citizens, and also for things like social accountability, to be able to more frequently engage with citizens or stakeholder groups to get their views on different issues. So move through the next slide, Serena, which is health, onto the one with a little bit of detail on it. Yeah, thank you. So there are a whole lot of ways, and we've been seeing a number of them during the pandemic, that blockchain can be applied to the health sector. So in terms of payment systems, and it's been used already during the pandemic for people to make insurance claims, financial inclusion for poor families, and there are a number of countries, including Britain, who are exploring how this can be used not only for poor families, but also to try and save SMEs who are really suffering as a result of the economic slowdown, and direct health incentive payments. So in poor countries, for example, some governments want to give mothers small incentives to attend antenatal visits, and this can be done using blockchain. We've spoken about supply chains for vaccine protection and provenance. Telemedicine is something that's really escalated during the pandemic. So telemedicine and remote care, and although it's not being used in this way, telemedicine can also be matched with tokenized payments so that you can receive your consultation and the medical provider can receive an immediate tokenized payment. So supply chain management we've spoken about, and blockchain-based polling for social accountability. Just a couple of last slides, Serena, if you wouldn't mind going on. I also want to highlight for you that probably in the same way as I've emphasised that the humanitarian settings and the pandemic has really accelerated innovation, I also want to point out to you that what we're seeing is a move in terms of digital innovation from the West. So global innovation leaders who've been US and Germany are ceding ground to emerging and developed Asia. China and India are becoming hotspots for global innovation. And there was a study of 20 innovations in mobile banking services where 85% originated in developing countries and 50% were first pioneered by the users because they're solving their own problems. Second point, next slide please, is that digital is giving small states opportunities to be able to overcome some of the disadvantage of size and geography. So small and nimble, many of them are using their micro-state status as a boon to technological innovation. And some of you have probably seen in terms of blockchain and digital assets, countries like Bermuda, Mauritius, Serbia, UAE, Malta, Gibraltar, Isle of Man, Liechtenstein, as being some of the leaders in digital assets and digital asset regulation. Next slide. Why do I think emerging economies are going to be the innovators and where we see the transformation? First of all, size and scale. Over 1 billion smartphone users are in China and India, compared with only 220 million in the US. Most of the young people are in emerging markets. 85% of the global population, where nearly 90% of people under 30 reside. Mobile penetration is increasing. We have about 70% of the world's population covered by mobile, and this is growing every day, and that growth will be in developing countries. They have huge problems to solve, and so they're going to be likely to innovate and welcome innovation. And their governments will welcome innovation often because of the lack of legacy systems. One of the challenges that places like UK, US and Australia have is we've already got pretty good systems, and so there's a lot of resistance to changing them. In many cases, emerging economies don't have that problem. So you've got young but increasingly well-off and tech-savvy populations with mobile devices and good network coverage. You've got 660 million mobile users in China and 400 in India, and emerging markets are at the forefront of latest technological developments, and they're showing their capacity to innovate. Move on to the last slide, please. Oh, no, we missed that one. Yes, go on to this one, sorry. It's a coordination. No, go on to the next one. I've done that one. Okay, so, you know, what I think is really powerful is this statement because it's true. For the first time in human history, we have the technological tools that will enable us to connect the bottom billion unbanked to the global economy and to provide digital identity to stateless people and to direct benefits to the poor and vulnerable. We have never in human history had that capacity before. Next slide, please. If we harness it, if we use it properly, if we move purposefully forward, blockchain can bring identity and economic opportunity to the poorest and most vulnerable anywhere. So that's the end of my presentation, and thank you all for listening.
Thank you so much for being here, Jane. We're really grateful that you came to speak with us. And unfortunately, it seems like that did run a teensy bit over, so we won't pause and we'll quickly move along. But thank you once again, Jane, for coming on and speaking to us a little bit about some of the other applications for blockchain that I think a lot of people wouldn't have initially assumed were possible, especially the one about procurement that I think could possibly surprise quite a few people. So thank you very much, Jane. And hopefully we'll hear more from you during the upcoming academic year if you come back to work with us again.
Okay, thank you everyone, and go forward and do amazing things with your lives.
Thank you, Jane. All right, so the next person that we're going to be introducing is doing something. It's actually one of the use cases that Jane brought up in the previous presentation, and it's actually using blockchain to kind of impulse or move forwards financial inclusion. And so we're going to welcome Renee Rensberg, who is a co-founder, and he is working now at C Labs. He's had a long and exciting career where he's moved from places like McKinsey, Morgan Stanley, the World Bank, now into, blockchain, which is really a whole different ballpark. So it'll be exciting to hear a little bit more about him and his background and what he's working on now from his perspective. Hi, Renee. How are you? Welcome.
Hi. Great to be here. Thanks so much for the invitation.
Yeah, thank you so much. So if you would like to, I guess, introduce yourself a little bit, talk about your background and what led you to be where you are and to do what you're doing now.
Yeah, absolutely. My name is Rene. I'm one of the co-founders of Celo. Celo is a new kind of platform for digital assets that takes a mobile-first approach. I think when you look at the potential for this technology, that Jane had some really interesting points in the talk just now. So much is limited though today by this not necessarily being accessible on, say, a simple phone. And we're approaching a point where we have about 7 billion smartphone devices out in the world, and those have really become commodities. But the financial products and services that are essentially, or that kind of are necessary, that we want to see out in the world, are not necessarily accessible on those. And so that's been a big part of Celo's journey in terms of thinking about how do we make digital assets, cryptocurrencies accessible on phones? How do we make it so that for really any user out there, the hurdles of actually adopting and using these technologies are low? I think one point that when we talk about the what will it take to really have a more inclusive financial system? I think a lot of the challenges really are less about kind of being very specific and giving access to someone who may not have it, but thinking about what breaks down the barriers of actually kind of making that access possible. And so if you take WhatsApp as an example, you and I would kind of message each other on WhatsApp, but it's also true that it's become really in many places where if you look at if there's one app that someone has on the phone, it might just be WhatsApp, right? And so kind of really has broken down the barriers of actually getting a system adopted, regardless where in a kind of global context. And I think the same kind of paradigm that we've seen was messaging services and information traveling much more freely, more openly, more quickly, kind of on internet infrastructure. I think that's something that's possible with digital assets, with cryptocurrencies.
Mm-hmm. It definitely seems like it has so many applications, and it's definitely like a young and growing almost field. It's strange to call it an industry because really it can touch so many industries, right? But I guess focusing specific on what you mentioned on the fact that there are barriers for access on things that I guess a lot of us would take for granted, and we consider, access to Monzo Revolut, of course, just turn on your phone and then you have everything, right? How was that something that I guess starting out your career at more quote unquote traditional institutions, how is that something that comes to mind, and where exactly do you see a need for a company like Celo?
Yeah, and maybe just kind of giving a bit more background on Celo. And yeah, you're right. So I started off in kind of more traditional finance, and I think for the most part, a lot of things are working well in the global financial system. But I do feel when you kind of look under the hood, or when you kind of look at even pre kind of Bitcoin, pre kind of blockchain, what some of the leading economists or philosophers have kind of put out in terms of, hey, where's this world going, and how may currencies look like in 100 years, you actually see that there's quite a bit of potential. And I think we're at this interesting point in time where we're very early still in sort of in this industry, whatever you want to call it, to your point. But the rate at which innovation is moving forward has been just phenomenal. And so, we've moved in a very short amount of time from this being really a fringe phenomenon to now having some of the leading central banks in the world, looking at how could they deploy a central bank digital currency, for example, on this infrastructure, right? Or looking at use cases far beyond finance. And I think for Celo, we look at the existing kind of ecosystem out there, and taking some of the payments apps out there, or even looking at this from a global perspective. I do think if you break it down, there's kind of the infrastructure piece of like just handling payments and handling kind of transfer of value, whether that's between people or organizations, whether that's within a country or globally. And then there's kind of the aspect of actually providing support to a user or an organization. And those could be separated, right? So you could see that infrastructure really underpinning a lot of the existing services that we have today, and just making them better, more efficient, faster, cheaper, and then separately also kind of leading to new use cases, right? And actually seeing use cases that are not possible with the current financial system. And so I give you kind of one example, or one situation maybe where kind of more specifically this is coming up in light of COVID. And by the way, it's interesting because I was at first, when you guys first pinged me, this was a physical event in London. And so I've been planning to be there. And then, obviously, now we're doing it digitally. But a lot of thinking has kind of shifted in these past few months, people thinking about how to kind of move things into the digital realm, right? And so I think digital activity has been increasing, but even more pragmatically looking at, for example, how our government's looking to get cash, get money to people so they can go about their life, relief payments, whatever it is. We're realizing that, it's 2020 and we don't have a good system, even in a place like Germany or the US, to just give people money. And for us, one of the use cases that get us motivated to start Celo as sort of a platform was actually looking at cash transfer programs that, for the most part, international organizations or humanitarian organizations are running, all around the world. And the cost, really, the operational cost of giving people money, just in some cases up to 30% of the amount that's being given, just seemed outrageous given the technologies that we have at our disposal. And so I think, that's a good example of a new technology making sort of something that we're already doing just better, right? And making it more frictionless and cheaper, faster, and all that good stuff. But then also you can think about, okay, what happens now if, and with Celo, the way kind of Celo works is you have, sort of a protocol that is, optimized for mobile, but in other ways kind of similar to some of the other blockchains out there, with kind of a few key differences, including an identity protocol that maps identifiers such as phone numbers to wallets. And so I can send you a payment simply by knowing your phone number, and you can then claim and verify that you have control to that phone number and see that pop up in your wallet. Or if you already have a wallet, it's there within sort of the 5-second block time. And that creates kind of a really interesting infrastructure, right? Where suddenly you don't have to worry about kind of sending money maybe halfway across the world. What are the banking details, or how may that person actually access those funds? And the digital assets on the platform can be pegged to local fiat. So the first digital asset on the platform, for example, is a stable coin pegged to the dollar. And so regardless of where you are, you have sort of the ability to actually receive a digital asset that's meaningful to you in a local context. But having that infrastructure in place now really kind of actually leads to a lot of new use cases, right? So you could see someone offering communal kind of microinsurance in a community based on payment patterns. You could see peer-to-peer lending happening in places where maybe the only access to kind of a loan right now would be a loan shark who charges 20-30% a week, a month, whatnot, right? And so it definitely one thing that we're very, very excited about is actually seeing kind of some of these new use cases. We just had a demo day last week for what was called Celo Camp, which was run by an organization in our ecosystem, Upright, with over 250 teams that were kind of present, participating. And one of the teams from Brazil actually presented a universal basic income, a peer-to-peer universal basic income. And so imagine just being one of a few people paying into a pot, and then that pot being just paid out to a community at the rate of, say, $1 a day per person. And so you'll see use cases that we just haven't seen in the world yet, but there's a demand for those, and it's going to be interesting to see over the next few years how some of that with technology that's now available is gaining adoption.
Mm-hmm. Yeah, there's quite a few things in there that I think were really that you mentioned, especially the part where you said, how expensive the transfer of money can still be. Jane brought up an interesting example of a person in Papua New Guinea who, you take the remittance of $200, you're left with probably around $160 if it goes to a post office, but then just to travel to the nearest bank to her costs about $60 because she's in a village that is totally unbanked. And so actually she ends up with half of the original amount, which is just outrageous in this day and age, right? It's definitely an interesting issue to consider, the fact that there are still so many barriers. But this is a really cool step forward. And you mentioned a couple things, but I'll start with one. How about you mentioned that it's so important to have stable coins because it's what you know. And then you also mentioned earlier that, central banks are going to be a big player in this. Do you think that it's really important that established players and established institutions kind of ease the way into adoption of these kind of technologies? Do you think that that's crucial? Is there any way around it, would you say?
This is a really good question. So and by the way, Celo is fully open source. It's a permissionless system, so anyone can participate and contribute to it. And the way it's set up, C Labs is one of the organization that's kind of contributing to the code and running pilots and working as part of the ecosystem. But there's a pretty active ecosystem forming. We have an Alliance for Prosperity, which includes big organizations like the Grameen Foundation or Mercy Corps, and then smaller organizations as well in market that are all integrating and building with or on the Celo platform. And so a lot of what Celo can be is really driven by the organizations that are actually kind of using the technology. Now the beauty is that coming kind of to your stablecoin question, that where we're starting is we have the native asset to the platform, which is just the Celo token that's trading on exchanges. Anyone can buy it, and that token is basically serving a bunch of purposes. It's kind of the utility asset to the platform. It's used for governance. So if there are proposals by the community, anyone with the Celo token can vote on those proposals and approve them or kind of maybe ask questions or kind of vote against them depending on what the proposal is. And so we're in the process right now where we're kind of as part of that community and governance process, we'll see the first token launch, which is Celo dollars. And in the future, you can see others. You could see other stable value tokens that are also packed to other fiat currencies, or you could actually see community currencies, right? You could see currencies that are, for example, have a very strict monetary policy in terms of, just really bringing prosperities to a certain community, or having interesting kind of features where maybe there's a tax on each payment that then kind of goes back to the community, right? You could think of all kinds of different interesting mechanisms that could be set up and tied to a particular community. It also leaves room for natural asset-backed currencies. So kind of imagine, and this is actually possible kind of across the broader platform, but having assets backed currencies that we want to see more of in the world, and not basically just other currencies, but you could imagine tokenized forest in the reserve. And so the more currencies get adopted, the more valuable kind of currencies become, the more trees we'll see out there, right? So, at a kind of abstract level, these are really interesting concepts that are now possible with this technology. And so from a kind of to more specifically answer your question, so how would kind of, how would it kind of play with bigger corporations or central banks even? The short answer is we'll see, right? We're just starting to see some of these big organizations participate in, running pilots or running programs or maybe contributing to some of these protocols. But longer term, my expectation is, or my hunch is that we'll see many of the kind of major organizations out there be active participants in a bunch of different protocols that they may be using kind of to go about their business, right? And so you have this happening today where at Square, payments company out of the US, there's a team that's contributing to Bitcoin. And, that's, again, open source. That's, there's no business deal, no biz dev kind of relationship between Bitcoin and Square happening. But it's because, Bitcoin is used in Cash App. And so there's value there. And, it makes sense, where the company has basically kind of said, look, it makes sense for us to contribute to this open source technology. And, like many of the internet protocols here, I think the hope is that with Celo and some of these other protocols, they will go far beyond some of the use cases that we see sort of, kind of some of the early teams and become adopted widely. And that the benefit of that decentralization is that you don't have sort of the traditional kind of vendor lock-in or, one company controlling the system, which from an innovation perspective, basically makes sure that things move a lot faster, right? And can sort of adapt to whatever Celo is used for in the future. And ultimately survive kind of, our generation and generations to come.
Yeah, and you also mentioned the importance, and I mean, you brought up how, Square is getting value out of the fact that their Cash App also is partly making use of Bitcoin. And you guys have the Alliance for Prosperity right now, which is at over 70 members. Would you draw an analogy there? Do you think that similarly the members who are all working towards this kind of goal, all the members in this ecosystem, they're doing it rather than out of some sort of biz dev relationship, like you said? Is it more of like a, they all see the value that could come out of this innovation, ultimately?
Totally, yeah. And to be clear, I think for us, or personally, I think, look, unless someone sees the direct benefit, how this can make kind of the organization that they're kind of leading better, then, I think it's the right time to engage, right? So I think with a lot of with all of the Alliance members, using Celo infrastructure can have a direct benefit to their day-to-day operations, day-to-day work. And that, I think, is the key motivator for actually joining the Alliance, for helping shape governance, for integrating the Celo platform. And whether that's for making remittances better or allowing people to do online work and earn in Celo currency, and then enabling kind of a rich ecosystem where people can use Celo currencies anywhere they go to pay for things at local stores or for top-ups at carriers. I think the idea is obviously that, with any community, with any sort of ecosystem, the more people are participating, the more valuable for the end user, right? Because the more things you can do. But already at this early stage, even in some of these very distinct use cases, there's direct benefit of using Celo over existing technologies.
Yeah, it's definitely a unique feature, I guess, of blockchain, I suppose, is the community feel, the sort of teamwork aspect of it. And, as someone who's also had experience in the bigger, more traditional institutions, would you say that it's actually the innovation, like, as you mentioned, right? It's in the nature of the technology itself. Do you think that that's the biggest barrier preventing traditional finance from, I guess, moving in a more positively impactful direction?
Yeah, I mean, look, the power of community is like nothing else. And we just, I'll give you one example, one concrete example. So until last week, Celo the Celo native asset was called Celo Gold. And, the reason for that was that, very early on in sort of the founding of Celo, or Celo Gold, as it was called, served the purpose and still does, but does so much more now, basically being an asset in the reserve that backs the stable coins outstanding. And so, the thinking was Celo Gold, like gold being physical gold in a reserve kind of underpinning traditional currencies. That's kind of an interesting analogy and hence the name. But, over time, especially with Celo launching and, kind of being proof of stake and Celo being the staking asset, the governance asset, really being used for so many more things, that name did no longer feel appropriate. And so one of the community members, one of the actually validators running the network, proposed a name change and first, kind of suggested it in Discord and on Twitter and got feedback and kind of then worked on a proposal and a kind of a Medium post to laying out kind of the rationale and then submitted it kind of, through the platform for a vote. And, the community voted. We had over 100 addresses participating in the vote and it was successfully approved. And so, it's something that if you think about a traditional organization, is that something that would happen? Maybe, yeah. But then, you think about all the different teams that need to be involved and the politics of that decision, right? Versus here, really anyone in the community, you could go to, Bittrex or one of the other exchanges that's kind of list Celo Gold today. You could buy some Celo Gold and you could submit a proposal. And the reason for actually asking people to have gold to submit a proposal is because, you want to avoid just having the system kind of fill up with like a bunch of spam proposals, right? So you want the person who's making the proposal also have, kind of a stake, that they feel like, hey, I'm putting some time here into this and I'm credible with my proposal. But you can propose an improvement to Celo and then have the community basically engage around that and potentially improve it. And so that really like suddenly moves you from, however big your organization is, whether it's tens of people, hundreds of people, thousands of people, tens of thousands of people, to making this accessible and adaptable on a global basis, right? To potentially anyone who is in some shape or form using the platform. And that's, I think, really powerful because I think that can bring, a lot more positive change much faster, right? And you have sort of the, you have a much bigger, kind of diversity of ideas and input than you would have in a traditional organization. And to me, that's, I think, something that I think some of the best organizations out there have tried to do in a traditional sort of centralized sense by having innovation teams or having incubators, right? And trying to bring outside innovation into the company. But here, that's actually core to kind of how the platform is evolving. It's basically through on-chain governance being able to get better and better over time and be kind of guided by sort of the community.
Mm-hmm. Yeah, it's definitely, I don't know, it feels a lot more wholesome than what I guess a lot of us envision when we think of finance or the blockchain or these kind of, I guess, what a lot of people would perceive as highly technical. And a lot of, I suppose, people do feel that way, that it's a highly technical field. And do you ever have trouble explaining to people, I guess maybe someone like your parents or your grandparents, because I know I do all the time, like, do you ever struggle to explain to them what it is you do? What do you think are the barriers in terms of, just average understanding on the street? Or for a lot of people who might be watching this now or later on when it goes up, a lot of them might be students. They might be thinking, oh my gosh, this blockchain, I'm not a hacker. How can I understand what's happening here? Like, what would you say, or what resources would you recommend people go to, or how would you explain it in an easy way?
Yeah, it's a really good question. So first of all, I think what I personally enjoy about this field is that it's very interdisciplinary, right? So yes, you have a strong technical component, but you also have to think about, hey, how does this fit into the regulatory frameworks in each of these markets? You need kind of product approach, right? To see, hey, what are actually the problems we're looking to solve, right? And then from there, work your way back to what is the right technology. You have, we have economists on the team, we have cryptographers on the team, we have people who've, spent their kind of careers thinking about compliance and kind of regulatory frameworks, right? I think there's such a much richer kind of diversity of thought than you would have in a traditional startup, in a traditional, even tech company. And so I think that generally, I think, has been something that's been interesting. And so to anyone who's kind of new to this, there's a pretty steep learning curve. But one thing I will say is the community is actually very welcoming. So once you kind of meet some of the folks, you kind of see kind of a high desire to have discussions, and don't extrapolate from sort of crypto Twitter where maybe sometimes things get heated. But sort of the average person working in the space is definitely just highly collaborative and open, and just given the open nature of the space, I think it's more approachable than many other industries. And we're very early days, right? We're 10 years into this journey, and I think we're just starting to scratch the surface of what's possible with this technology. So for anyone looking to join or kind of like start their career, this is, I think, a great place to do it, because there's going to be so much learning here, really, versus any other industry. Now, I think you also, by bringing this up, I think you make a really good point, because education is the number one kind of critical thing. And whether that's someone who uses a crypto wallet or someone who uses kind of a decentralized finance product, right? How much context is required to actually benefit from this technology? And I think personally, my sense is that the more this can kind of be in the background, the better, right? I think we want to kind of offer solutions that are, no one is asking, hey, how does my phone actually work? What is actually why does it turn on when I press this button? How exactly does it work? Sure, we have a general understanding. And I think similarly with blockchain, I think we want to make sure people have a general understanding of the benefits and what it actually could mean to them. But I think more specifically then in the applications, we want to just make this much more frictionless to really let many more people participate. And that's something I think that's been hard, just given how early the technology was. But hence our focus on mobile, on starting with sort of some of the solutions, what are the use cases, and then working our way back to the technology. But you're absolutely right. On the technical level, some of the work is, I think it's some of the most exciting work that's happening full stop in computer science today, right? And so you really have many of the smartest people in the world kind of working on this, which I think makes it a really great kind of industry to join.
Yeah, I think we will definitely have to agree with you there as UCL FinTech, and hopefully people will, join both us and Celo, as they learn and grow and hopefully find fulfilling and gainful careers to follow up on. But for now, we're going to have to cut that there. But thank you so much, Renee. It's been really great to have you. Hopefully we'll hear more from you, and we'll hear more from Celo and C Labs, as time goes on and as blockchain can only inevitably get bigger and bigger, right? So hopefully we'll get you back and you won't forget us when you're, huge and successful.
Awesome. I would just say anyone interested, just join our Discord, and, everything is open source, everything is open. And so, even if you're just looking to dabble in this, there's so many ways to kind of get started. It's very different from a traditional company where, you don't really kind of see behind maybe the walls of what's happening inside the buildings. Here, where it's very different. So anyone is invited to kind of join and contribute or engage.
Great, thank you so much for being here, Renee.
Awesome. Bye.
Bye. All right, so we're going to move swiftly along and introduce our next speaker, who I'm very excited to speak to. So we're going to be talking to Emilyn Shaw. So she's got she'll correct me if I'm wrong, but I think it's over 20 years of technology investing experience. She's got a wide and varied career, and I'm sure she'll have some very interesting insight to impart, because she's working at a company that, in my mind, is quite unique. So we'll hear a little bit more about that from her directly. Emmalyn, thank you so much for being here. How are you?
Great. Thank you so much for having me.
Hi. So, I guess we'll just jump right on into it. How would you describe what you do and where you work, and how did you come to find your current role?
Great. Well, let me give you some context a little bit for me. I grew up in Huntington Beach in Southern California. My parents were first generation, came for graduate school, immigrants. And I joke that my mom would have been a nun if she didn't marry my father. So giving back and service was core to my upbringing. And my father, on the other hand, actually his family comes from development banks. And so really used to seeing how financial services in particular have benefited kind of small to medium businesses and the power that can have in international markets. So that really kind of prompted me to both lean towards service as well as financial services. In terms of technology, I've been in and around tech since I was an undergrad at Berkeley. I was a product manager. I worked full time to put myself through school or pay for expenses and whatnot. I was a merit scholar at Cal, and I worked in tech at Apple, and then I was a product manager full time. So really, actually as a financial services product manager, portfolio analytics company called Bara, and so really immersed myself in tech early and fell in love with that. And I think that's what led me to then pursue finance and investment banking at Morgan Stanley in the 90s. So I had an interesting front row seat to the emergence of the .com, and then unfortunately a front row seat to the .bomb as well. And started my investing actually in January 1st of 2000. So had good fortune to be in and around some larger funds, some smaller funds, doing early stage investing and growth stage investing, investing in software, internet, technology, new media, and really appreciating the different models that emerged as a result through a couple of downturns. Fortunate to work with some great companies, realized some wonderful successes, and along the way was feeling something missing, and in particular around the impact side. And it wasn't as if venture wasn't impactful, it just wasn't a focus of venture, right? It was about returns and commercial opportunities, some of which were impactful and some of which it just wasn't a focal point. And I really wanted to find a platform that actually truly prioritized those as important tenants for their investing strategy. And that's where I was introduced to a mid-year network. And Pierre Midier, founder of eBay, was really coined impact investing. And he birthed this idea of using both equity and grant dollars to affect global change, international change. And financial services was one of the many tenets that they were looking at. And in particular, the model was really built around commercial investments that were financial service focused, but that advanced financial health and economic resilience. And that really resonated with me in terms of the work they did, the focus, the ability to really create change, but using very interesting technology to do so. So I was joined about 2 years ago to run what is now Flourish. We spun that out of a media network last March. And in doing so, spun out 18 folks, 40 portfolio companies, of which we've added a number since then, and another 5 ecosystem investments, and run a $500 million global fund. And it's really been around that ability to affect change using investments, focus on financial health and economic resilience. That's been incredibly powerful. And I feel like it brought me full circle from where I started to the current platform today.
Wow, that's certainly a pedigree of hard work, definitely pushing towards impact as a focal point. That's a really interesting background to have, actually. And you mentioned that the aims of Flourish Ventures are to advance financial health and economic resilience. Do you think you could give to some of the people who might be less familiar, I guess, commercially, or who might not be 100% sure what those terms might mean, like maybe some use cases or some, companies that you invest in, for instance, that you think are really interesting and think, people would really learn a lot from?
Absolutely. So I think you can think about it in two ways. If you think about the actual individual consumer, financial health in one way can be measured just through the ability to save, right? To have buffer, to be able to live within their means and have savings for other discretionary expenses and the like. And I think being able to have that resilience long-term, being able to have those choices is critical. And so if you think about that equation for one way to think about it is savings equals your income minus your fixed expenses, which is often the core. So education, housing, healthcare, all of which have gone up astronomically across countries for the last 15, 20 years. And then minus other discretionary expenses and fees. And if you think about that, it's very difficult to understand, well, how do you boost financial health? How do you boost savings and that comfort? And that's really around either increasing income and or helping them reduce some of the fixed expense costs, or accessing debt in a more safe, predictable way that isn't predatory. And those are some of the direct-to-consumer ways of thinking about financial health. So against that, what kinds of investments can be created? Well, one that we did globally, a thesis that we started off, was around the challenger bank. And the challenger bank is better known as mobile banking. And the idea being that, deposit taking services, financial services in general, should be accessible to everyone, and ideally accessible at no fees. And there's no reason why that can't be done today. And part of what we saw was kind of the unbundling and rebundling of financial institutions, and the idea that, can we provide some rich financial services for the consumer, not having to own all that infrastructure. So you don't have to own, your physical location, your retail branch. You can actually rent a banking license, and you can actually partner with a processor and be able to provide those rich services. So what does that end up doing? That ends up actually affording for rich deposit taking services for consumers. They then can start saving. You can start seeing their cash flow. You can start thinking about giving them overdraft fee protection. So no longer the overdraft model that exists today, that's quite frankly taking quite a bit of advantage of consumers globally. You can start thinking about wage advance opportunities as well once you have this longer term perspective for the consumer. And it really builds this, and then you give them budgeting tools and the ability to think about, how do you manage expenses thoughtfully? How do you think about what expenses to trade off on? In the US, for example, we focus on the 70% of US Americans who live paycheck to paycheck, for whom $500 does not exist for an emergency loan. So that's very much a middle class problem. And so you think about along those dimensions, what other types of products can you provide? Well, how about debt management, right? So many globally, individuals have debt of some type, whether that's educational debt, whether that's credit debt, whether that's mortgage. How do you manage those? How do you manage those payments, particularly if you are living paycheck to paycheck? What kinds of technology solutions and interventions can you do to allow them to actually take a portion of their income and save in order to pay for those thoughtfully? And how do you prioritize what to spend when? And those are the types of products specifically for the consumer that you can really help with, right? There's also infrastructure. There's also business to business type of opportunities that really allow to unlock, if you will, all of the other financial services that can be provided. And I think that's another area that we've spent quite a bit of time on, is whether that's middleware, whether that's enabling banking as a service, whether that provides embedded finance specifically for all the platforms today that we engage with. Is there a way in which we can actually transact in some of these platforms, and historically we haven't been able to do? And middleware allows you to do some of that technology. Another part of infrastructure is around security. So if we're out on different platforms and our financial data is out available on those platforms, how can we ensure that they're secure? And how do we actually take control, hopefully, of that data to make sure that financial data is being used correctly? So again, those are kind of areas in which we provide agency for the consumer around really important parts of their financial information. And that's another area in which we spend some time. So I think there's a lot of dimensions in which financial health can be engaged. It's not as simple as a one-point solution. I think it's quite deep and quite multifaceted. On the global scale, we look at small to medium businesses or individual shop owners, and how do you think about providing them lending and access to capital, right? Or farmers. So really critical parts of an ecosystem globally that might require that type of capital. And we think very thoughtfully about what kind of platforms can enable lending as well along that dimension.
Yeah. It definitely sounds like there are a lot of dimensions to it, but that must make it so exciting to, be at the helm of something like Flourish, where you really have the opportunity to go in as many directions as you find inspiring, right? And as you mentioned just now, you were talking about on the global scale, and you mentioned, consumers and data privacy, which is definitely a big issue. And that kind of brings me to a question I wanted to ask. Like you said, Flourish is a $500 million global fund, right? So you're also going abroad. And I'm wondering, with, attitudes towards, like consumer attitudes being so different from space to space. Like we brought up challenger banks. Here in the UK, most people I know have at least one of Monzo, Revolut, etc. And then, that obviously changes from America, where people, a lot of people aren't even, exposed to contactless as an everyday technology. And so there's so much, range in the variety of what consumers expect from their services. And then obviously there's China, which is just, a million light years ahead of us with that. So I have to ask, when it comes to global investing, how hard do you guys have to think about the consumers and the culture, I guess, that people are facing when it comes to your investments?
No, it's such a great question. And just to clarify so half of our capital is deployed in the US and the other half is in India, Africa, Latin America, and other parts of Southeast Asia. And I agree with you. There's a cultural dimension for sure in terms of how individuals interact with financial services and their financial institutions. And there's also a regulatory distinction, as you rightfully pointed out. And in terms of regulation, there's technology innovation that may exist. So open banking in the UK, for example, it's wonderful. It's unfortunately, we're light years away from that in some of the other markets that we cover. And so as a result, you see very different kind of emergence in technology. And in particular, also different business models that might emerge, right? So in the US, it's for challenger banks, it's an interchange model, right? That's very different than you would see in the UK. And you would also see that in LATAM. But in other markets, it might be more like a subscription or might be more lending based and as an entry point and as a different way to monetize. So I think both business models are surfacing differently, but the global know-how I think is pretty important. And the understanding across markets is very important. And the need, I think that's one of the exciting parts for us when we did challenger banks, is to see that pervasive need globally. Right? Whether that was in Latin America, whether that was here in the US with Chime's 8 million consumers, whether you see this in Mexico, whether you see it in India, whether we've seen it in Pakistan, the consumers have all very clearly leaned in and wanted a technology that provided this kind of rich end-to-end solution. And being able to have that learning from market to market to figure out how to roll out, well, what features matter, right? How important is that budgeting app? I think there are some markets in which lending becomes a more natural place to start. And then other markets like the US in which the deposit and the checking account was the right place to start. But all of it required trust. I think at the end of the day, as you can only imagine, financial services has been such a difficult nut to crack because trust is so critical. And I think since the last downturn, there was a bit of trust to be rebuilt by financial institutions. And I think FinTech has a unique opportunity to really take that trust, to build that deep relationship, to prove their value to consumers in a meaningful way. And I think challenger banks have done a great job in trying to do that with their consumer by meeting them where their needs are and providing really rich services and visibility and transparency, pricing transparency into their products. And that's been pretty critical across the board, across countries. And it's that learning that I think we bring, that global perspective, that's been very powerful, not just to our challenger bank investments, of which I think we have 7 now globally, but across all our portfolio.
Mm-hmm. Yeah, it's an interesting question, to be sure. I mean, I know it's definitely interesting at UCL because we're so global. We have 40,000 students, and every which way you turn, you're hearing a different language. Someone's using a different app. I mean, I saw in the quad someone speaking Chinese to someone else selling bubble tea using a QR code, and I was like, why can't I do that? So yeah, there's definitely some cool things going on over the world. And this one I have to ask, that's a bit, I mean, I guess this one's apt for me to be asking to you, because this is a little bit of an exception for, I guess the industries that, you work in and that our society works in is, for 2 women who are not white already. That's already quite a big distinction, I guess, from quote unquote the crowd. And I'm sure a lot of people have walked into rooms and not felt represented when they're, talking about industries of this kind, I guess. And would you say that you're seeing a change, I suppose, or do you think that there are ways for funds like Flourish to encourage a change? I guess what's your experience in terms of diversity, I suppose?
Well, I feel really fortunate in part of the many things I loved about Omidyar and then ultimately Flourish is that commitment. And I think, you always want to start from within. I think it's easy to look externally to take action, but I think we need to be reflective within. And so I think early on that was important. And as you can see, we have majority female on our team. We are rather diverse by virtue of the markets we cover as well. And we're very committed to that. Now, there's still a lot of work to be done, and I fundamentally believe that's going to continue to be an area of focus. I also think we, just in light of what's been happening globally, but particularly in the US, are really taking some time to think even more critically about what does that mean and our own reflection, our own actions. And that's something that we're actually doing real time. As you can imagine, it's such an important topic. In terms of how we think we can continue to affect change, I think it's twofold. Our commitment in particular to the LMI community globally is so critical. It's unfortunate, but the reality is the racial diversity is quite pronounced in financial services, and those particularly in the LMI are disproportionately represented there. And so our commitment to really wanting to help provide support and tools and services is really targeted at really trying to raise that awareness and raise that financial stability so that they can actually operate competitively in I think this market. Beyond that, I think we're also really thinking through what our role could be as investors, whether that be on the boards, and when we think about bringing in independence, as well as kind of our own investments, and how do we think about making sure we really try to cultivate the right types of portfolio CEOs and management teams. And it's something we've been focused on, but there's always more work to be done. And again, I think this has been a really interesting and really important and emotional call to action for all of us to step up in a much more meaningful way, in a much more deliberate way. So I'm excited to lead the charge on that. But I very much echo what your sentiment. I think it can be quite lonely. I think it's incumbent upon us to be successful and committed to that change, to create that role modeling that will then afford for more people like us that share, people of color, people, diversity in terms of gender, and other dimensions, to really be given a seat at the table. And I think it starts with us and our commitment and being very successful in showcasing what we can bring and what our values are.
I certainly hope so. I certainly hope both as UCL FinTech and at Flourish, we can definitely make some sort of headway into working towards that, ideal world, right? And you mentioned actually something that I think ties in quite nicely with something you previously mentioned, which is, the current situation right now. There's a lot of thoughts going on about race, and you mentioned earlier that there's, that you guys are working on also investing towards services that try to help consumers stay away from so-called, predatory loans. And I was recently watching a documentary about 2008, and it's just totally heartbreaking how certain communities were targeted, but that it wasn't even just them, that there's just whole swaths of the population were just totally displaced in a shocking way. And I think a lot of people lost faith, I suppose, in the financial institutions out of the aftermath of what happened. And in America, obviously we're seeing some recovery now, but tens of millions of people lost their jobs out of the coronavirus. Do you think that there's going to be another huge loss of faith coming, or do you think that there are steps we can take, or steps I suppose you can take at Flourish and at companies to try to encourage people to have faith in a product that works, or in a product that's transparent and good?
No, I think that's a great question. I think this has been an interesting time for financial services. I think to some extent, just by virtue of actually having to be remote, and the shelter in place has really lent itself to more of the mobile and the digital solutions and the contactless payments and the like. And so in that regard, it's really opened up an opportunity for financial services companies to engage the right way. And I think in particular with some of our investments, again, because we target those who I think who definitively have been most disproportionately impacted, those services have been only in greater demand. So as you can imagine, when you've lost your job, we have one platform called Steady that is targeted the gig economy workers, the 1099 workers here in the US. And they've always fundamentally believed that a portfolio of work is what people need to either augment their pre-existing jobs, right, to increase income, going back to that savings equation we had earlier, and or to create a portfolio of work to afford for flexibility in times where you have childcare and the other pieces of their own personal equation. And in this case, they needed that visibility across the nation as to, well, what are the hourly jobs that they can do, and who is paying the most for those services, and who are taking care of their employees in a way that provides the flexibility that these Americans may need. And that demand just went up tenfold. And then knowing that, they then provided telemedicine and offers services like that in order to make sure that they could then continue to take care of their health needs as well. Those are really powerful opportunities, and I think they develop a really important level of trust. Another company of ours, Propel, is targeted on the food stamp recipients. And as you can imagine, here in the US, the demand for their services doubled in terms of they provide pure visibility into the level of food stamp that they have on any given time of the month, and provide discounts and services along that dimension to allow them to kind of really extend their ability to food and whatnot for as long as possible. So really meaningful functionality and in doing so, they were able to partner with a company called Give Directly, where they gave $1,000 cash injections, particularly trying to target families, single mom families globally who needed it the most. So really trying to, again, engage meaningfully with the consumer where they were, and the unique platform they provided to be able to identify that they truly were in need and they really were food stamp recipients, allowed them to be able, as donations, to ensure that they went to the right person with credibility. And I think those are the types of services you'll see. Chime, as I've mentioned earlier, they were able to provide, based on their own relationship with their consumers, access to $300, $400 no fees associated in advance of a stimulus pay. So they knew that they would be likely to receive stimulus. They knew it was going to take 2 to 3 weeks because the system, quite frankly, is still quite archaic here in the US, and there's a lot more to upgrade over time that we hope to be part of as well. But in the meantime, that's the role that Chime played to provide, again, that trust and visibility. So I do think there are a lot of technology companies, and those are just a couple of our portfolio, but many others at large, that have really tried to engage more deeply with consumers and take advantage of that relationship and to be really a partner for them as they navigate a very difficult time in the market.
Mm-hmm. Yeah, and I suppose I have to ask as well, now that we're on the topic of your portfolio companies, and you said, that's a portfolio that's growing ever since you spun off, you're just, looking to invest in better, I suppose, and more impactful organizations. What, if there's a company that you're interested in, I guess, what are the metrics? Where do you look towards to see, what impact is this having? Is there a way to measure such a thing as impact? And for instance, if people are considering going into impact investing themselves, or on the flip side, if someone's an entrepreneur and they're wanting to set up an impactful company, what would they look towards to ensure that they're, meeting their goals?
Yeah, I think it really starts with the kind of the mission orientation, and it's really important to understand what is the product they're trying to solve, what pain point are they trying to provide for their consumer, or if it's a business to business, what infrastructure are they trying to unlock through their innovation. It's also really important to make sure that the business model is aligned. So at the end of the day, if a company is making money based on certain attributes that ultimately benefit revenue growth, but at the expense of a consumer, for example, no matter how interesting or impactful it may seem at the beginning, and often you can find those, that divergence alone is what's going to preclude us from making a deal. We need to be able to see that there's a win-win, both for the business to thrive long-term, as well as the consumer to benefit long-term. And if those misalignment exists, then it doesn't make sense. And I think that tends to be the more nuanced decision points when you're looking at mission-based deals than maybe one would imagine up front.
I suppose the coherence might somehow, I guess, escape at certain levels where it might not be so clear. Okay, and I guess
and then just to answer your question in terms of the impact piece, look, I think as direct-to-consumer businesses, there's a lot of things to look for and to see scale. So are you reaching the consumers? Are they changing their behavior? Are you seeing a high degree of saving, an increased savings rate? Are you seeing fees come down for them? Are they behaving differently, more thoughtfully about their financial health? And are they using the budgeting tools? Is the usage case going up? Are they making different decisions in terms of trade-offs, et cetera? So those are some of the more kind of micro areas that we look at. And then the macro, it's a regulated business. We look for systems change. We would love to see not just the technology companies themselves make change, but how does that technology impact the broader ecosystem? How has policy shifted? How does regulation shift? How do incumbents in financial systems respond? So, an interesting one with challenger banks has been, with the advent of challenger banks, I think that's really provided some impetus for incumbents to think differently about how do they serve their consumers, what kind of functionality they can provide, how broad do they go downstream, and what consumers are they willing to serve now that maybe they wouldn't historically as a result? What other types of technology innovation do they want to create? And that's just as impactful, quite frankly, as the companies themselves being successful. So there's a secondary element as well that we very much track longer term. And that is a long-term game. As you can imagine, it doesn't happen overnight, but it's something we're very committed to watching.
Yeah, no, and it definitely seems to be working. There's a graph that's been circulating, I think, a little bit around LinkedIn that's got like the amount of clicks it takes to open a bank account. And then there's like 20 for Revolut and like 100 something for, one of the traditional British banks. And it kind of just, the picture looks as you would imagine it would. And I think banks are definitely starting to pay attention. And I suppose seeing as a lot of the people watching this, whether it's now or, moving forwards, are going to be students. And they're going to be a lot of international students considering a range of career options at the moment, but a lot of them may be considering finance, technology, some of these kind of professional fields. Do you have any, I suppose, advice on what they should be thinking about when it comes to choosing a career? Some people may be thinking, I really want to do something exciting and innovative, but in this economy, can I do that? Will I be able to, find something to do? Should I just stick with something classic? I guess, what would you tell students and young people or, even budding professionals to think about when it comes to their career arc, as you've done such an exciting one yourself, I guess?
Well, it's funny you asked me that question because I have 6 children, of which 4 of them are kind of young adults. So going through, and we've had this conversation many times. So it's apropos. And I would say you want to start with first, what's your passion, right? What is it that you're truly passionate about? And making sure that if it's technology, if it's finance, those are not, those are great. Or if it's financial services writ large, that's wonderful. Then try to find the platform that you're going to get the most experience, the deepest, the first level of training. I always feel like that first step you make is really about building the training, the foundational training. But it's just the start, right? Part of the beauty of what the journey that you're embarking on is to be able to really grow. And if you like technology at all, you want to be growing. You need to be moving because technology is shifting every week. And so really trying to stay abreast of what roles you're playing, whether that's in sales, whether that's in marketing, whether that's in finance, and making sure that you are committed to the skills, the requisite skills that you're building in that one cohort. And then the willingness, honestly, to then switch and to continue to push yourself in thinking through. I guess the analogy I would give is even in as I'd mentioned with my venture career, I could have stayed in early stage. I started an early stage venture, and I probably, that would have been great. I knew that for me to be a thoughtful venture capitalist, I wanted to understand the stages of venture. And the stages of venture start with early, they start with seed, and then they go to min, they go to growth, and then they go to exits. And I wanted to see what it meant to put money to work at those different stages and the roles that we play as investors and the hard decisions you make and the different types of management teams and how they shift and how technology shifts and what strategic decisions they make along the way. And I wouldn't have got that if I hadn't been willing to take the leap of faith and switch funds to be able to really understand those skills. And I think for me, I knew I loved venture, but then I knew I needed to still explore within and really experiment and build out my understanding. And I think that analogy applies in whatever field you're really passionate about. The other comment I would make is, and I say this now to kids, and for me, it took me longer. I'm glad I discovered my route. I don't know that I could have done it. I don't know if I had the confidence, quite frankly, to do it up front, but I'm really glad. And I can see this generation has very much leaned into mission. And I think that if you figure out something mission-based, whatever that is, they hire the greatest talent. The CEOs are most truly committed. I feel like they're the most competitive platforms out there. Some of the mission-based companies, whether they are on, the investing side like mine, or they're on, the operating side. And I think that goes a long way towards feeling really good about both your passion, your values, and your learning. And it's then those trade-offs that you make every day are not going to feel like trade-offs, are going to feel like growth. And that's a really important piece of the decision as well, and one I'd highly recommend.
I think your children are very lucky to be able to have this kind of wisdom on tap, that's for sure. And I really encourage everyone watching to check out Flourish and have a look. It's really an interesting organization. And I think a lot of people might not know that that's an option of a long-term career as well. So, if that's something that you're interested in, definitely give Flourish a look. It's a cool organization. All right, well that's us out of time, so I'm going to say a huge thank you to Emmalyn. Thank you so much for being here, and maybe if we're lucky there'll be another opportunity for us to collaborate again with UCL FinTech and yourself.
I would love that, and thank you so much for having me. Really appreciate it.
Thank you so much, Emilyn. All right. So thanks you everyone for having tuned in and having checked out our webinar. If you missed part of it, or if there was part of it that you found interesting, feel free to check it out later on Facebook or YouTube. It'll go up in its entirety later on there. And yeah, hopefully check out some of the work of the speakers we've had. Celo Labs is really interesting. Flourish is really interesting. They do some cool work, and there are a lot of possible careers out there. So definitely stuff to think about if you're still considering what sort of career you want and what skills you have and what interests you. So hopefully that was interesting and you guys learned a lot. So for the next week, we're going to be talking to some really interesting people. We're going to be looking at the investor versus the entrepreneur's perspective on, entrepreneurship and how that's going to look like now in terms of COVID, as well as just a little bit in general. So if you're interested in what that looks like, definitely stick around and tune back in next week to see how that goes. But for now, this is Serena, the president of UCL FinTech. I'm going to sign out and see you all hopefully next week. Thank you very much for watching.